Now imagine this, a world with no queuing and long lines, transactions are completed within fractions of a second, and no more major thefts like bank robberies. Our country is progressing towards a fully cashless society. Cashless society can be simply defined as a state where all the financial transactions take place through transfer of digital information instead of physical banknotes or coins. In this video, we will discuss the idea behind a cashless society and how it relates to both macro and microeconomic concepts. Let's get straight into it. Firstly, what are macro and microeconomics? Macroeconomics can be defined as a study of the economy as a whole or an aggregate. As for microeconomics, it is a study of the individual units in the economy, such as the decisions of individual firms and households. Let's move on to our first macroeconomic concepts, leakages and injections. So what are they? To simplify, leakage means withdrawal from the flow. They may be in the forms of savings, tax payments, and imports. Leakages leak out and reduce the flow of income. Injection, however, means introduction of income into the flow. Injections are injected in and increase the flow of income. Injections can take the forms of investment, government spendings, and exports. This leads us to our question: how can a cashless society affect the leakages and injections in our circular flow of income? One of the advantages of a cashless society is the prevention of tax evasion, which is a significant problem for governments. Self-employed workers such as builders can seek to be paid in cash and therefore declare less income than they actually earn. This leads to a loss of income tax revenue for the government. It is estimated that the UK government lost £8 billion in tax revenue due to cash-in-hand payments. Preventing this will increase government spending, which will lead to injections, which will then lead to higher household income. With this higher household income, there is a tendency to demand more goods, which will in turn lead to economic growth. Next is GDP, or Gross Domestic Product. And what is GDP? It is the total market value of all goods and services produced in the economy in a given period, usually within a year. What is GDP used for? Basically, GDP is used to measure the economic performance of a country. A high real GDP would mean that an economy is at its peak. This is when firms generate high business profits and households enjoy a high level of income. In contrast, a low level of real GDP will indicate that an economy is going through a recession. How does a fully cashless society affect the gross domestic product? Going cashless should raise the recorded GDP growth by reducing transaction costs, which would mean higher profits for businesses, reducing gray economy by more efficient monitoring from the authorities, and curbing tax underreporting and evasion, which would mean more tax revenue collected. Moving on from the microeconomic concept, marginal analysis. It is a process that takes place when a person tries to make a decision. In the decision-making process, people usually make comparisons of which actions benefit them the most. It involves the consideration of marginal benefit and marginal cost incurred for a certain action. A person will definitely choose an action which will give him more marginal benefits. So how is the cashless system connected to marginal analysis? When people buy goods and services, obviously, they want to pay using a more beneficial payment. Most used payments that people use nowadays are paper money and cashless. So in order to decide which option will give him more marginal benefit, people must do marginal analysis on all options in order to decide which options that they're going to use. Let's take a look for the marginal analysis for cash as an example. As for cashless, the marginal analysis are as follows. So as we can see, by doing marginal analysis on both options, we can conclude that using cashless system brings more marginal benefits than cash. Therefore, when buying goods and services, people would choose to pay for goods and services using cashless, as it has more marginal benefits than paying with cash. That is all for our video regarding micro and macroeconomics of cashless society. Thank you for watching.